Hello, everyone. Good morning. Hello, everyone. Good morning. This is Emmanuel Odogu reaching you from the beautiful city of Port Harcourt. This is our morning market review. Let me apologize for starting a bit late. And of course, thank you for waiting till this time. So we are starting immediately. So if you wanted to leave, don't leave again. Don't leave again, please. We are starting right now. Please let me know if you can hear me. Let's do some sound check here. Can you hear me? Okay, fine. I appreciate the response this morning. You can all hear me. So let's just get straight into the business for the day, okay? So once again, my apologies for starting a bit late. It was due to some issues here. So, but then it has been resolved. So we're starting right now. So just give me a minute. Let me share my screen with you so that we can get started. So you can all hear me. Let's get started. So just like we always do, we like to always start from the fundamental side of things. So as you know, the market is majorly driven by fundamentals, right? And then when we see those move, we now analyze it technically on the charts, if you understand what I mean. So once again, the market is driven by fundamentals. Then when we see those moves, we now analyze it technically on the charts. So those of us just joining us, this is Emmanuel Odogu, Richie for the beautiful city of Port Harcourt. This is our morning market review. It's one solid hour of market analysis where we try to give you previews, market tips, and tricks on how to navigate the market profitably. Now, navigating market profitably simply means you making profit, right? It simply means it's a kind of wisdom kind of trading that you minimize your losses and maximize your profit. Not eliminate, you minimize, right? So you minimize and maximize your profit. So one of the ways you can minimize losses and maximize profit is by doing your analysis. And the analysis you can do is fundamental analysis. And of course, you can also do technical analysis. So one of the major drivers of the market is fundamentals. I hope you guys are still here. Just a minute, please. So let me share my my screen so that you can see I am on Forex Factory right now. So you can see my screen right now. I'm on Forex Factory. I want to believe you can see my screen. So if you can see my screen, Forex Factory, just type Forex Factory. That just type Forex Factory, F. Just type F. Forex Factory, meaning that you can see my screen. Okay, thank you guys. I really appreciate the response. We'll try to make this one very snappy, very fast, such that you also learn and also get an analysis, right? So one of the major reasons why we do this is so that our client can be profitable, right? So because when you're profitable, then it is good for us, okay? So it means you trade forever or you trade for the longest time. So for today being Friday, the last day, come on. It's been a good thing, man. The last day of the blessed month of May, as you can see, this is Friday. The only red impact news we have is by 1:30 p.m., right? And that's on CAD and of course on the US dollar. Okay. Now, for those of us joining this money market review for the first time, this is the date of the news. This is the time of the day to be released. This is the currency to affect. Currency, not currency pair. This is the impact. Impact is simply the volatility, right? Volatility is simply the rate of change of price with time, right? So that means how much it will move, right? In a very short period of time. So if it is red, it is high impact. It is danger, that means to move very well. And of course, to position ourselves in the profiting side of it, okay? and make money from it. Then if it is brown, as you can see here, it is medium impact. Then if it's yellow, it is low impact. Okay, so we traders will try to align ourselves with the high impact news, right? High impact news. So for today, being Friday, the 31st of May, we have a medium impact news here. That's called CPI, medium impact. That's by 10 a.m., which can equally have a little effect on the euro. Then, of course, by 1:30, we have GDP. That's from the Canadian, that's from Canada, right? Month on month. Then we have the core PCE. That's from the US, right? Core PCE. So these are factors that we use to measure inflation. So both CPI and of course PCE are equally used to measure inflation, right? So inflation that is creeping into the economy, right? Now, but then CPI is usually a stronger one compared to PCE because PCE is personal consumption expenditure, which is also used to measure the changes in the price of goods and services, right? Now, but then since CPI comes out before PCE, so CPI takes most of the glow, right? I mean, takes most of the moves, right? But then don't neglect PCE. PCE can equally give you good money, okay? So one of the ways I do trade this news is I normally use both the buy stop and the sell stop. I'm sure you already know that very well. Now, you place a buy stop and you also place a sell stop, right? Now, because most of the time, trying to look at the result of the news and coming back quickly to your charts to place the trade, you might go through some kind of delay. So one of the ways we do that is you can just use a buy stop and a sell stop. So what you want to do is the news by 1:30. So by 1:20, you want to place a buy stop. So you can do it on Euro USD or you can do it on GP USD. I prefer GP USD, right? Moves better and faster. So GP USD, place a buy stop, right? So you can do that like 7 pips away from the market price, or even up to 10 pips away from the market price. You can also do sell stop 10 or 7 pips away from the market price. So you're setting the trap one above the other one below, right? Just above the market price and of course below the market price. So don't forget, you also add your take profit, right? Take profit, then you might want to also use a bigger lot size, right? So if your normal lot size is 0.03, you might want to increase it to 0.08. Just make it bigger such that any small move is enough to give you good profit that can take you home. So if your normal lot size is 0.1, you may want to use perhaps 0.3, right? Or you may want to go 3 times bigger than your normal lot size, or minimum 3 times bigger, such that you can make something good from it. I hope you guys are still with me. I hope you guys are still with me. Okay. Excuse me. All right, so that's how we trade this fundamental. Then, of course, there's a lot of testimonies on this. I can tell you this for free. There's a lot of testimony trading this method. So if you perhaps you may not have been doing very well, perhaps because of you're not trading fundamentals very well, huh? So you can make a lot of money from trading fundamentals. So you can do the same thing on a card, right? But then you just want to leave out USD card, right? Because there's news on those two currency at the same time. So you just want to leave out USD card. You can do card JPY, right? It's a separate instrument. Now, using this method, one of the advantages of using this method I just explained is it's called the straddle method. One of the advantages is that you can trade more than one instrument at the same news time, right? So that means you can set all of these things I've mentioned, maybe up to 5 different instruments, right? And all of them can give you profits at the same time. Now, that is one of the advantages of using the straddle method. So guys, I want to believe you're still with me and you're getting value from what I'm explaining. Okay. All right, so I will switch over to my chart right now so that we can look at technical analysis. So once again, I said the market, the major movers of the market is fundamentals, right? So then when this market start moving, it start creating some chart patterns, right? It start giving us the structure, it start building some structure. So looking at those chart patterns, the structures, the way it is formed on the chart, that's what we now call technical analysis, right? So right now, we'll switch over to my charts so that we can do technical analysis. So I hope we're all good. Okay. All right, so please don't forget, this is Zoom right here. So we're also recording this particular session, right? So you can watch it again, maybe after we are done. There also is also being you can get it on YouTube, right? You can get it on YouTube. So if you miss anything, you can just go straight to YouTube, and of course you search for Rally Trade. Then of course you can watch it again. So if there's anything you're going to miss or anything you have missed, you can actually go back to YouTube. So let me share my screen right now. Just 1 minute, please. So I've been able to share my screen. I want to believe you can all see my screen right here. Let's start from USD index. Let's start from the dollar index. Please, can you see my screen? If you can see my screen, just one or two persons should just type chat. Please, just type chat. It means you can see my screen. Okay. So please just type chat. Means you can see my screen. Okay, fantastic, fantastic. So let's start from the dollar. Let's start from the dollar index. Looking at dollar index, we are trying to look at the strength of the dollar, right? Because most of the time our trading is on the dollar, right? That's something to do with the dollar. All right, so let me start from the H4 time frame. So the kind of analysis I do, okay, the kind of analysis I do is called, I just look at the market structure, right? So market structure analysis. So that means I look at the structure the market is building. Then from that, we can tell the direction the market is going. Please don't forget market structure analysis. A market structure analysis, to me, it is the language of financial markets. So the financial market has a language. So you just looking at the chart, the market is trying to communicate to you that, hey, look here, the price is overpriced or it's overvalued. That means it has gone up too much. It has breaking structure to the upside. It's going up. It has taken out the last week high, the last month high. So the market is communicating to you what it's trying to do, right? But if you don't understand the language of the financial market, which is the market structure, you will still be buying at when the market is overbought, and then it will not leave you at the up there and start coming down. Same thing if it's going down too. So let's look here. Let's reduce our zoom a little bit. So let's judge for ourselves what structure we are seeing right now. So how can you tell the structure you are seeing? So you want to do something like this. Please, most of my analysis, what I do is I teach you what I'm trying to do, okay? Okay, I teach you what I'm trying to do. And that is the best, right? That is always the best because it's good for teach a man how to fish. You remember that, right? It's always better. So teach a man how to fish. So I teach you how you can be able to look at the chart by yourself and of course come up with uh, the direction the market is going. You're either buying or you're selling, right? Okay. So from what we are seeing right here, there was a dip here, right? So let me start from here. So this H4 time frame, right? So why are we doing this on H4 time frame? You can still trade on your normal lower time frame like H1, 30 minutes, 15 minutes. But the reason why I'm looking at H4 time is so that we can get a larger perspective of the direction the market is going. And of course, those big players look at this or that bigger time frame rather than those smaller time frame. Okay. So you knowing the overall direction, that puts you in the money. Okay. That's gives you an edge. So there was a dip here. Of course, there was a retracement here. Now, I just decided to start from here so that to make it much clearer, right? Then there was another dip, right? As you can see, this is a dip, right? So this is an impulse to the downside, right? So once the market impulse like this to the downside, if you notice, the aim was to take out this low because liquidity will be trapped below this low, and I call that target liquidity, right? So the market have taken out this low. So once the market keep taking out the lows, it means the market is going down, sir. So the market took out this low. So by the fact that for the fact that the market took out this low, it means the market is going down, sir. Now, you can do this analysis on this dollar index. Now, just one analysis, you can use it to trade Euro USD, GP USD, USD JPY, USD CAD. You can use it to trade all of the USD denominated currency. In fact, all of the USD currency pair. Just one analysis. So that's why it's good for you to start your day on this dollar index. So the market has taken out this low. Okay, so it retraces, right? So we expected this retracement. But why it's trying to retrace going up? Now we have a protected liquidity, yes. That means we have an area where the market should not trade above. Which area is that? That area is this high, right? So remember, the highs and the lows are the most important area on your chart. Sir, you want to quickly grab your pen and your paper and write it down. Come on. Write it down, please. Or you cram it. But don't use your head as a filing cabinet. It's always good to have a pen and a paper. So you write it down. The highs and the lows are the most important areas on your chart. So what we have above the highs and below the lows? What we have above the highs and below the lows? What we have above the highs and below the lows are what we call liquidity, right? Liquid. Simply put, money. Which money? They are your buy stop and your sell stop. They are your exits on your trade, which is your stop loss, your take profit. So we call that liquidity. So this is the direction the market normally moves towards, right? Because that will give it more liquid or more money to move further, if you understand what I mean. So simply put, these highs and the low. So the market have taken out this low. Now is going up. You notice that it carefully did not take out this high. See where it stopped. Now there's a reason for that. There's a reason for that. Had this market took out this high, then the market would have turned and start going up. But it did not. It respected it. So that's why I call this the respected, or if you like, the protected liquidity, right? But this one, this low was violated. This high was not violated. So take note. Once you're looking at the chart, you start looking at the highs and the lows. Which of them is being violated? You notice over time, the market will be violating one and be respecting the other one. Now, I don't know whether you guys are still following me. So let me know if you're understanding what I've been saying. Please, do you understand what I've explained so far? All right, so it got to this point. It stopped, and then this time around that it's coming down, guess what? Remember, for the fact that it took out this low, the target is also to take out this low. Because it keep protecting this high, right? So let me rush here. So if you notice now, all of these inner ones are called internal structure, but let's not go into that. So that will be complex for you. So it came down fast. It took out this low to form a new low. Wonderful, beautiful, right? Now it's going up again. Now remember, this high is being protected, right? But you notice it moved this much, right? Then it came down this low. Then so the internal structure has failed, right? even though I'm explaining the external structure, the internal structure has failed, but the external structure is still holding, right? So that means in a very long term, right, the USD index is still on a downward trend, right? Now, but for the midterm, right, USD index have shifted to the upside. So that means for we day traders and of course swing traders, we are already seeing some bullish signs in the dollar, right? But for the long term, it is still down. How do I mean by still down? This high is still being protected, right? So very soon, once this high is taken out, then on the long term, it has shifted. Now let's even if we switch over to H1 time frame, you will also see that for the short term, right? Excuse me. You also see that for the short term, this instrument is still going up, right? So what do I mean by that? So you can see this was the last high, right? So you can see that the market has taken out this high, right? So taking out this high is a sign of strength, right? For which instrument? For the USD index, right? Now let's jump down to Euro. Let's start from Euro USD. Excuse me. So let's look at Euro USD, yeah? So on Euro USD, what can we see? What can we be able to? Okay, let's start from Euro USD. So on Euro USD, yeah, what can we deduce from here? So you want to always look at what like I always do, I always start from the H4 time frame, right? Like I can have an idea what the big boys are trying to do, right? Okay. So from here, you can see that this has been upward, as you can see. Drawing this thing now. But you understand it, right? Sometimes there might not be need for me to always be drawing it. But just looking at it, you can see that this is upward from this particular part I'm doing right now. So it keep breaking structure to the upside, and that's what we call higher highs. This high, but it failed. So we have seen a failure swing. So we saw a failure swing on the H4 time frame, right? So this is a failure swing. By failure swing, I mean it failed to trade. Please confirm if you can still hear me. Okay, so you guys are hearing me. Let me continue. So audio is very bad. Can you hear me now? Please check again, please. You can hear me. Check, 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 please. You can hear me. You can see my charts. Check now again. I've been able to restore the audio. Check again, please. Check. You can hear me back now. Thank you very much. You can see my screen. You can hear me. So let's do this, please. All right, thank you guys. So you notice it was trying to go up, see where it stopped again, and of course it started coming down again, right? So you notice it has failed to trade above this high, the last high. So that's the first sign of weakness, right? So we call that a momentum loss, right? So we have lost our momentum there. What momentum? The upward momentum, right? So then, if you notice, it tried to go up, it tried to move upward again. Now, this time around, you notice it did not trade above, it actually, now let's zoom in and see that stuff very well. So the next time it traded upward, you can see that it actually traded above this high, but there's something here. It traded above the high, but it did not close above the high. Now that's another important thing you have to note. It traded above the high, this high, right? But it did not close above the high. Now, closing above the high could have been sign of continuation. Trading above the please. Trading above the high is good, but closing above the high is best because closing above the high means it wants to continue going up. But just trading above the high with only the wick, right? Then closing below it, that suggests that it could only be trying to grab some liquidity, right? Okay, so that's a fake out. That's a fake out. So, and then you notice it came down, and of course, this Euro USD place, and if notice it traded below this low, right? So, for the fact that it traded below this low, and of course, it failed to close above this high, so the Euro USD is still on a downward trend, right? For the midterm trend, please. Okay, now what do we normally do, right? So once you have discovered something like that, so what you do is you can use your Fibonacci, you draw from the high, right, to the low, right? Then of course you wait for a premium price, right? Premium to discount array. So it has moved from premium down to discount, right? So you wait for it to give you another premium price. Premium prices are once the market trade above maybe 50%. So you notice the market are actually traded above 50% of this impulsive move right here. Right? And inside this area is a good area. So inside this area, from 50% and above, usually 61.8% is a good area that you can sell. So you can see the market actually traded into this area and then start coming down. So this is how you can analyze the market by yourself, and of course, know the area to start trading from, right? So from this analysis, you can see that the entries can be inside this area. So it's actually an area, not a particular price, please. So when you analyze the market, you come up with an area. So it is called area of interest. So that means it is inside this area I'll be looking at for a sell position. But don't forget, I'm doing this on which time frame? H4 time frame. So that means that's a bigger time frame, right? Now, but in up down to a much lower time frame. That much lower time frame can be your 15 minutes time frame, it can be your 30 minutes time frame, right? So what are you dropping down to that time frame for now? Dropping down to that time frame from dropping down to that lower time frame is what we call top-down analysis. So that means you have looked at the chart on the H4 time frame. Fantastic. Then now you have dropped down to a lower time frame so that you can take your entries, right? Now, if you drop down to a lower time frame, inside here, you should be able to see a change of character. By change of character, we mean you should be able to see that the market is now violating the lows, right? And you should be able to see that the market is now violating the lows. Violating the lows, I mean the market is not trading below the low. Please, I don't know whether you guys are still following. Excuse me. So now let's drop down so that you can see. Now, this type of analysis is just giving you the ammunition, the arsenal that you can use on your own. You can just open the chart, look at these areas, and of course, you start trading from those areas. Okay. Now, if I should drop down to maybe let's use 15 minutes time frame. Take note, I've already shaded that portion, right? So this is 15 minutes time frame, guys. So that means I already know that Inside this shaded portion, I'll be looking out for the market trading to the downside. Take note. So once this market traded inside this shaded portion, now remember, I'm no longer on the H4 time frame. I am now on M15 time frame. Inside this shaded portion, I'll be looking at for a sign that will show that the market is about going down, so that I will start selling. So what I will do is, I'll carefully look out for the market structure, which is, this is a high, right? And of course, the market traded lower to form a low. Don't forget this. You always be drawing this at the beginning stage. This is a high to trade higher. And of course, this is a low to go lower. Then the next time it was trying to trade higher. Now it's supposed to trade higher than this high. For the fact that it stopped here, that's the failure swing, right? Then of course, immediately it traded below this low that it has been respecting. If you notice, and let me draw from it so that you can get it very well. So if you notice, all along the market on this 15 minutes time frame, it has been violating the highs and respecting the lows, right? I hope you understand what I'm talking about. Now, this is what I mean. This is upward trend on the 15 minutes time frame. So all of these lows are being respected. I mean, the market is not trading below the lows, as you can see. It's not trading below the lows. But the market keeps trading above the high to form a new high, traded above this high to form a new high, traded above this high. So that's upward trend, right? Now, but then for the first time, the market violated that low, now traded below the low, right? That's the kind of shift you're looking at for. And remember, it started from this shaded portion, right? So once you notice that, that's when you start selling. So when do you sell? You sell when the market gives you a discounted, a premium price. So any movement a little bit upward, you start selling. So that means your sell will be happening from either inside this area, or once you have used this area to note as your area of interest, right? So you can start selling. So anywhere around here, you can be selling. I hope you're getting value. So that means if you have sold, you would have gotten this profit for today. You would have gotten this profit. How much profit is that? Somewhere around 23 pips. 23 pips with a 0 point with $1 per pip. That's about $22 or $23. Let's be fair enough. Let's say it's $20. So $20 for $1 per pip, right? $1 per pip. That's manageable for the day now. In this economy, you can actually manage $20. You know, most person can manage $20 in a day. Most person can manage $20 in a week, right? Now, that's even the smallest volume I'm talking about, or a small volume I'm talking about. So you would have taken this profit already. Now, take note. Even right now, the market is still going up, as you can see. Now, this area is still valid. Now, if you notice what I explained, now you're asking, is it okay to use line chart rather than drawing? Yes, you can use line chart, sir. But then don't understand this drawing first before you can start. You can get to line chart. Okay, I think that's your question, Edwards. Now this area is still valid. Remember, we got this area from our Fibonacci, right? This area is still valid. So now this market is trying to retrace upward again, right? So if it retraces inside this my area of interest, right, I will still be looking out for a change of character. I mean, the market to violate the lows. Once the low is violated, I will sell again. So that means inside this area is the area I would like to start selling. I hope you guys are still following me. So now, I think let me leave Euro USD. Spend enough time on Euro USD, right? But what I'm trying to do is not just to give you a buy, say, no. I'm trying to give you the ammunition. I'm trying to give you the arsenal, what it takes to look at the charts and tell whether the market is going down or is going up, right? So for now, on the H4 time frame, we have seen that the market is trading to the downside. Why? On Euro USD on the H4 time frame, we have seen a momentum loss, right, to the upside. So that means the market is trading to the downside. And if it's trading to the downside, we have been able to to see an area. We'll be able to mark an area, right? Where we call area of interest. That means if this market trade inside this area, then I'll be looking out for a change of character. Change of character is simply the market on the lower time frame, the market trading below the lows, then of course I'll start selling. Please. You understand that? Then let's shift over to another instrument. Okay, your question is, please, how do I customize my Fibonacci to look like yours? Okay, you want my own. Okay. You just have to pay a little profit off it. All right, so sir, it's very simple. Mine does not look like yours on my laptop. Okay, my Fibonacci is okay, I'll teach you how to customize it, right? But not here. You just have to draw your Fibonacci, you double click on it. That will take us time. You draw your Fibonacci, you double click on it. Then of course you right click, you click Fibonacci properties, right? Then of course you start adding those values. So I'll draw my number at the end of this meeting. Then of course you can chat me up WhatsApp. Then I'll maybe explain further on how you can achieve it. But for now, we don't have time. Let's continue. So, guys, you guys are getting value. I want to believe so. Then let's switch over to GBP USD. And after that, we can now start talking about USD JPY, of course, gold, right? Now, let me do GBP USD. GBP USD. Man, I like this instrument. I so much love this instrument. The reason why I love this instrument is that this instrument is one of the instruments I trade on a daily basis, right? All right, quick one. Let me zoom into the area again so that we can see. So remember what we did on H4 time frame. Now, I don't think we are going to spend much time on this one because I've already laid the foundation, right? I've already laid some foundation. And that foundation I've laid is the one that we are going to use here. So on the H4 time frame, what can we tell here? Now, let me ask you this question. That will show whether you are following or not. Looking at this H4 time frame, looking at my chart, on the H4 time frame, please, looking at the market structure. Now, when I say look at the market structure, I want you to look at the highs and the lows, right? That's what I want you to look at. So focus on the highs and the lows, especially the most recent highs and lows. Now, can you tell if this market have changed direction and is now going down or is still maintaining the upward movement? What can you tell, please? So what can you tell? What can you deduce before we start drawing? Going down, upward movement, going down. Okay, so you guys are divided. Now, this division is what normally makes traders to buy and sell, right? So you can see for yourself that whatever conclusion you were able to come up with on the chart, that is what will be primarily responsible for the type of trade you take. Okay, somebody is saying still bullish, no break of structure yet. Wonderful, I like that. Now this low is very important to me. This particular low, this low is very important to me. Now, why is that low important to me? Because it was that low that is responsible for trading above this high. So this low is responsible for trading above this high to form a new high. So you notice the market from this low traded above this high. So I can call it a strong low, right? A strong low. So why is it a strong low? You notice the market was trying to come down, right? So remember Newton's second law. Every object or even the market will continue in its state of rest or of uniform motion. So this is a uniform motion that is supposed to continue, right? But it was acted upon. So that means could not trade below this low. So that low is a strong low. So that means it stopped, right? So this low is a strong low, so we can actually mark this low, very strong low. So on the H4 time frame, if this low is taken out, then we are now officially going down. So right now, GBUSD on the H4 time frame. Now you notice anytime I'm trying to give, let me call it a judgment. Anytime I'm trying to tell you the direction the market is going, I normally make reference to the time frame. I don't know whether you have observed it. On the H4 time frame, GBP USD is still on the upward trend. Why? Because this low has not been taken out. So this is why we have the strong low. Hence, we have the protected liquidity below this low. So if that protected liquidity is tapped, then we are officially going down, right? Now you notice the market stopped somewhere here. And then, of course, start going up again. See where it got to, and then it started coming down again. So why did it stop somewhere here? Remember what we did, right? On Euro USD, we drew our Fibonacci. Then we saw that it traded into this 50%. Now, do you know you can be doing this and be making a lot of money for yourself? Eh? I'm telling you. So once you have seen this impulsive move, this is a dangerous impulsive move. So whenever you have this impulsive move, either to the downside or to the upside, you look out for a retracement. That retracement usually follow Fibonacci, the golden Fibonacci ratio. Now, once it traded above 50%, that area is usually a very good area of interest, right? So anytime that's traded above 50%, so that means trading above 50% means 61.8, even 78.6, all of that. So area of interest. So that means, now let me zoom into these areas that are bigger. So inside this area is where you should be looking at for your to take your sell trade, right? Inside this area. Now remember exactly what we did on Euro USD. Inside this area, you now drop down to a lower time frame, right? You drop down to a lower time frame. On that lower time frame, then you now start taking your trade. But for right now, what's happening right now? You can see that there was a very big move to the downside here. Of course, that's trend for the dollar, and then it's trying to retrace, right? So we have two areas, right, that the market can target. So the market can target this high, or the market can target this low. As you can see, these two areas are areas the market can target, right? So if the market should target this low, remember, if you take out this low, then it should also be going out for taking out this low. So if this low is taken out, officially we are down. Then you can start doing all of the sales in this world. All right, let me drop the lower time frame so that we can look at a much our area of interest on the lower time frame, so that once the price has gotten to your area of interest, then you can now start maybe taking your trade, right? So this is H1 time frame. So I think it looks much easier and much clearer here. Now take note, this area is still holding for us, right? So if there's any retracement into this area, then of course you look out for a change of character in that area. By change of character, let me say it again, it means the market is now trading below the lows, right? Now, if you want to say, you want to see the market trading below the low on the lower time frame. Now, the first move, the move you need to see before you start trading is to see, if you want to sell, you should see that the market is now trading below the lows. If you want to buy, you want to see that the market is now trading above the highs. Now, very important, you may want to equally write it down. If you want to sell, see that the market is now trading below the lows. You want to write it down, sir. If you want to buy, you want to see that the market is now trading above the highs. Now, what I just explained is what we call change of character. So you want to see that happening inside your area of interest. This is called a trading model. So if you continue to do what I'm talking about, what I'm talking here now, continue to do it, that's your model, right? And over time, you become profitable using it. So, sir, this area is still very valid for us, right? So if the market trade inside this area, then of course we can take our trade inside this area. So if you take your trade inside the area, of course, you know your stop loss will have to be above this high. And of course, your next profit target will not be this low here, because by that time this low must have been fully formed, right? But take note what is happening right now. The market is going bullish right now, as you can see, right? So if this candlestick close above this, now this H1 time frame, if this bullish candlestick close above the high of this bearish candlestick, that is what we call a bullish engulfing, right? So that is another area of interest. And that's another area of interest. That's another area of interest. So that area of interest means the bulls are coming back, right, in the lower time frame, right? So that's another area of interest that you may want to start taking your shot back, targeting this high. Then at this high, then you want to look out for a change of character from here, targeting the lows. Now, let me do gold, or let me do USJPY. Somebody have asked for USJPY. Somebody have asked for USJPY. That person is still in the room. So let's do USJPY. Quick one. So USJPY. So after USJPY, we'll now switch over to gold. Then gold will now shut down. So we are seeing a very strong bullish movement up here on USJPY, right? So that justifies that there is some strength in the dollar, as you can see. So let's go to our custom. Our custom is we'll try to look at our custom is we try to look at it from the H4 time frame first. So on the H4 time frame, what can you tell? So we are already seeing from these lows, we have this high, right? Then from this high, we took out this low. But if you notice, there is a lot of wick. There is a lot of wick here. By wick, I mean there is a lot of wick now. Wick is sentiment, right? There's a lot of wick here. So that wick could just be the market trying to grab liquidity around this area. Because from what we can see on the chart, the market is trying to trade towards this high. Now, this high still remain our target liquidity, which it has been taken out. This high is our new target liquidity. So we can see, say, this USJPY is on an upward trend. It's on an upward trend. So if it's on an upward trend, drop down to 15 minutes time frame, or if you like 30 minutes time frame, then you look out for your area of interest, right? So this area is still our area of interest, right? Now on this 15 minutes time frame, you notice we have taken out on this lower time frame, right? On this lower time frame. Okay, let's use 30 minutes. Anyone, please. Now, if you notice, I'm not just using 15 minutes. I can use 30 minutes, I can use 15 minutes. Now, you will still be seeing the same structure. You'll still be seeing the same structure. Now, on this particular time frame, you can see that this is a low, right? Then, of course, this is a high. Now, this is a lower low. Now, let me just pick out the ones that are very obvious. This is a high. Okay. This is a failure swing, failed to trade lower than this low. Now it has traded higher than this high. That means it has changed from a protected liquidity to a target liquidity, right? So that means we are now officially going up. So it's showing clearly on the 15 minutes time. So if you're officially going up, then you look out for buy conditions. What are your buy conditions? If the market gives you a discount, then you can start buying. What do I mean by discount? You can know discount using your Fibonacci replacement tool. So if you draw from the low to the high, A discount is when the market retraces below 50%. So if the market retraces any further below 50%, then I'll look out for a buy just below 50%. So if this market retraces below 50% ratio, anywhere here, I would like to buy. Now that's for a conservative trading, right? Now, for those of us very aggressive, I'm sure we may want to jump in right now. Now, but for the conservative trading, you want to wait until the market comes to you, right? So you don't chase the market, you hunt the market. You hunt the market, you don't chase the market. Now, another area of entry, right, could be if the market trade above these highs, then you can now look at for another entry, right? If the market trade above these highs. Now, let me look at gold, and from gold, we can shut down this. So let's look at gold. I think by just doing gold, then we shut down for gold. So this is gold on the H4 time frame, right? That's shiny metal. So we're back here now. Look at gold here. Now the structure is really, really somehow, man. But if the structure is looking very funny, what you do is you don't try to just reason it from your head knowledge. Just draw your lines, right? These lines will not lie. These lines are numbers. Numbers don't lie. Just draw your lines. Then, of course, it will explain to you what is really happening. Now, you don't try to be emotional about the direction. You don't get to a point where you prefer one direction over the other. Okay? So you just draw. So this heavy movement downward, took out this low, took out this low. That is downward. That means the market have shifted to the downside. But the fact that it took out this low, right? The market have shifted to the downside. Then you notice it did a little retracement again, right? Then from that retracement, it traded below this low again to form a new low. So that's the market shifting to the downside. Now it has shifted to the downside. Now, but you notice it has a lot of room here that it can equally cover. Okay. Now, 15 minutes time frame. Let's look at what the market is doing there. So on this 15 minutes time frame, so I'll just draw my Fibonacci from this high, right, to this low, right? So I'll look at this area of interest. Remember, our area of interest is usually from 50% and above, right? So this area of interest, right, it's a very good area of interest. So anytime the market trade into this area of interest, it's a sign that the market could start falling further. So this is my area of interest. I would like to do a sell, right? This is my area of interest. I would like to do a sell. But how can I say? I will sell when I see the market start taking out the lows, right? So this, if you notice, this high is lower than this high, right? But then this low is higher than this other low here. So that's actually a range bound market. So if the market successfully, listen to this place, this is my area of interest, right? That I would like to take my trading decision. So if the market successfully does something like this, mean that it has formed a low. Once that low is taken out, then I can start selling from my area of interest, right? So the market is already inside our area of interest. So that means the area where I would like to start selling from. Why selling? Selling because we have seen from the H4 time frame that the trend is going down, right? So once this market is able to trade inside this area of interest, it means that it has formed a low. Any movement below this low, then I would like to start doing my sell, right? Then where would I target? I will target this low. then of course my stop loss will have to be above the highs. So guys, thank you very much for staying through to this time. I'll drop my number so that if you have questions, you can ask questions. We've been able to extend it to 9:30 because we started a bit late. My name is Emmanuel Odogu. And then that's 09026264507. That's the official line there. So guys, thank you very much. Please join us on Monday again for another exciting session. If there's anything you missed, go straight to YouTube. Okay. We're streaming it live on YouTube. You can only watch the recorded version there on YouTube. Guys, thank you very much. Bye for now.